Okay, today I'm going to show you how to reconcile a bank statement. And basically what that is we're just comparing the amount that the bank says we have in our account versus what our books say we have for that account. So, for example, here's a sample bank statement from Rooney National Bank, and our company is Van Persie Imports, and we had a beginning balance of $3,200. We had all these deposits and withdrawals throughout the month to get us our current balance of $5,000, which I highlighted in blue. So now if we go look over, we can either look at the general ledger or the balance sheet for our company, Van Persie Imports, and it's saying that in our cash account for Rooney Bank, we only have $3,400. So there's obviously a discrepancy of $1,600 that need to be accounted for. So that's where the bank reconciliation comes into play. We have to make adjustments to get them to equal. And these differences between the general ledger account and what the bank statement says we have can occur for a couple different reasons. The first one is errors. A lot of times people record it wrong. Like you might record a check for $967 instead of $976, which would throw off the balance. And errors can occur on the company side and the bank side of things. Another thing is just the time it takes for a check to clear at the bank. They have a thing called flow. It takes usually a day or two or more for a check to clear. You might have deposited checks towards the end of the month when the bank statement was already made. Another thing, you might have checks that have been given to you and recorded on the books, but you just haven't taken them to the bank yet to record. So several different things can make the balances off and need adjustment. So now we're going to work through a problem on how to do the bank reconciliation. And the first thing we need to do is do the cash balance according to the bank. Oops. And if you look at our bank statement here, it was $5,000. So, and these are usually bank reconciliations are usually separated in two parts. The top part's usually the bank side, and the bottom part is usually per company. And I'm gonna go ahead and write in the cash balance per our books real quick. Okay, and up here is just these are the adjustments we need to account for to reconcile this thing. And the first one is we deposited a check on January 31st and it wasn't recorded by the bank, and that was $250. So we need to add this because the bank's not properly showing how much we have in our account. It's $250 less, so we need to add the $250. Okay, next, number 2. Oops. There we go. Alright, number 2, we have outstanding checks for $600, $500, and $400 for a total of $1,500. So these are checks that we have paid out to customers or vendors and recorded on the books. But the bank has not recorded that in our account, so it's $1,500 too high in our bank account, so we need to subtract that $1,500 on the bank side. So we're going to do less outstanding checks. I'm going to move that down a line too. And we add these up, that should be 1,500. Let's see. Okay, so we subtract those. 3,750 is our adjusted balance. Alright, so when we do the same thing for the company side, we make our adjustments. It should equal 3,750. Alright, so now we're going to look and see our next one. We incorrectly recorded a check for 1476 instead of 1976. So what we're going to have to do is we're going to have to add that $500 because we recorded it for too little in our general ledger. So we're going to add okay, and next we have insufficient funds from Vermall and Company was returned by bank, so 115. So they wrote us a check for and they didn't have the money, so our bank never got that. So we're gonna have to subtract it from what we have in our books. So less insufficient funds check. Okay, and finally a bank service charge for $35. We need to subtract that too. And 115, actually 150. All right, 3750. So they add up. So we did it correctly. And the next thing we need to do is discuss internal control. Whenever you're talking about reconciling a bank statement, it's a good thing to have segregation of duties. You don't want the same person handling your cash and your checks as the same person who's reconciling the bank statement. It'd be easy for them to pocket the money and just force balance the reconciliation. You also see a lot of doctoring the bank statements in this area, and check tampering schemes are also common with reconciling the bank statement. And that's why I put this extra little spreadsheet on here about the fraud triangle, which if you've taken auditing or accounting fraud, you're probably going to discuss this. But basically what it says is when most frauds occur, there's three separate things that take place. There's usually an opportunity for someone to commit a fraud, a pressure, and a rationalization. And if you segregate the duties on reconciling the bank statement, you're probably going to take away that opportunity leg of the fraud triangle, and it's going to make it much harder to commit the fraud. And pressure is just some sort of like economic pressure. You know, maybe you need money, or maybe you're a high executive and you need to make the financial statements look good for investors. That's what that's talking about. And rationalization is just saying that a fraudster will usually be able to rationalize what they're doing and make it sound okay. Like, oh, they don't need the money anyways, or it's just $100. Basically something like that. And review what reconciling the bank statement is. It's just we're comparing our book amount to the bank amount for our account and making sure that they're the same and making any adjustments as necessary. But I hope that helps, and thanks.